DSCR loans have everyone talking, which is no surprise because this is an amazing loan product. Today, I'm answering all of your questions about DSCR loans. If you haven't had a chance to check out my video walking through every step of this loan product, go check that out in the show notes below. I'm Hannah Escher. I'm a mortgage advisor and rookie investor with 2 properties of my own, and I'm so excited to answer your questions today. Let's start off with a brief overview. DSCR stands for Debt Service Coverage Ratio, and this loan product allows the cash flow of a property to qualify you for that loan versus traditional financing that's going to use your personal income. So this is a great loan product if you may have a higher debt to income ratio or maybe not so desirable credit. This can be a great product for getting into that first investment property with less paperwork and without having to use your own income to qualify. So let's dive right into these questions. I'm going to be going through each one individually, so I'll be referring to my notes for some of these questions. Let's get started. First question, which lenders will provide DSCR loans? Do you have any recommendations? Well, before we get into that, let's just remember that every lender is going to have different loan requirements because this is not a loan backed by Fannie Mae and Freddie Mac. This is a loan offered by private lenders who usually you have to broker with through your mortgage advisor and their lending company. So each lender is going to have different requirements for what they offer in a DSCR loan. So this is where it's really important to be working with a trusted mortgage advisor who can help you navigate this process, and not just the process, but the loan itself. Now, if you're working with a trusted mortgage advisor already, that is absolutely wonderful. Take this information to them and see how they can help you connect with someone who can tell you more about this loan, see if they can help you get this loan through their network of lenders. However, if you're not working with a mortgage advisor yet, this is a great opportunity to go on our website at BiggerPockets.com/find-a-lender and see if you can connect with a trusted mortgage advisor in your area. And with these types of loan products that are a little bit different, they're not backed by Fannie Mae and Freddie Mac, it is even more important to work with a lender who's well-versed in investment products and investment properties. So that tool can be a great help if you're still wondering where you can find someone to work with. Question number 2, can self-employed people use this loan product? Absolutely. This is an amazing product if you are self-employed. The biggest reason being that when you're self-employed, a lot of times your debt to income ratio is going to be in the higher range. Also, when you're self-employed, many times you're going to be taking off all of these write-offs on your taxes, and that's going to lower your profit margin, which then lowers your purchasing power. So a DSCR loan is a great product if you're self-employed, because it allows you to use the cash flow on the property to qualify versus your personal income. Is owning a primary residence always required? This can be a little tricky. Some lenders do require that you own a primary residence because a DSCR loan is meant for investment properties. Some lenders also require that you cannot be a first-time home buyer. However, there may be exceptions to this rule. So make sure you speak with your mortgage advisor about that and see if there's any wiggle room in that rule for you. This is where it's really important to be working with a mortgage advisor that can look at these different lenders for you. They can talk to the account executives and they can find out, hey, is there any wiggle room on this? Or maybe they can even find a lender for you that doesn't have that requirement. So most of the time, there's going to be some requirement around owning a primary residence of your own or not being a first-time home buyer. However, there may be options depending on the lender you go through. Can you use a DSCR loan if you're a non-resident? If yes, what's the down payment and do you charge a higher rate for non-residents? This is a fabulous question. And many times there are going to be lenders that allow these loans to be used for non-residents. So again, check with your mortgage advisor and see what's possible. See what lenders they work with who offer this product and just let them know your situation. That's why working with a mortgage advisor is so so important so that you can get a product that fits with your exact personal situation. No two situations are going to be exactly the same. So try to find that person you can work with who's going to help you find the best product for you. If you close an LLC and want to use a HELOC or refinance to purchase another investment property, would the entity have any negative effect as opposed to your personal name? This is a very good question. The answer to this is yes and no. Closing in an LLC is absolutely possible with many of these products that are not backed by Fannie Mae and Freddie Mac. However, if you're doing a HELOC or refinance out of it, you might have to use that same type of lender for that HELOC and refinancing. So you will have options, but it will limit your options. So if you're planning to take out equity from these properties and you want to be able to do it really simply and have the most options available, I'd suggest closing in your personal name if that's an option for you. Again, you want to be doing what's best for your specific situation. So figure that out first and then move forward from there. Do DSCR loans show on your credit report if you close in your personal name? The answer, again, is going to be maybe. So having a liability show up on your credit report really depends on the lender that you're going through. If they're a very small company, they may not even report to the credit bureaus. If they're a larger company, most likely they are going to be reporting that mortgage to the credit bureaus. However, this is something to keep in mind. Even if they don't report that liability to the credit bureaus, when you're going to get another mortgage, let's say it's for a personal primary residence, or maybe it's another investment property using a different type of product, you're going to have to show proof that you've paid those mortgage payments on time, even if it's not reporting to your credit report. So it can actually get more difficult if a lender does not report to the credit bureaus. There's going to be additional paperwork needed to prove that that liability is being paid within the terms that you agree to. So there you have it. Hopefully you have an even better understanding of DSCR loans. Thank you so much for your time today. I'm Hannah Escher. You can search my name on BiggerPockets or find me on Instagram. And if you found this video helpful, like and subscribe to the BiggerPockets Rookie channel for more videos just like this. I'll see you next time.